Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the February inflation numbers and expectations. Last week, the National Bureau of Statistics (NBS) released the Consumer Price Index report for February 2024. The Consumer Price Index (CPI) is used to calculate inflation as it measures the average change over time in prices of goods and services consumed by people for day-to-day living. According to the report, consumer prices rose 31.7% year-on-year in February 2024, the highest since the rebasing in 2009, from 29.9% year-on-year in January. Similarly, on a month-on-month basis, inflation quickened to 3.12%, much higher than 2.64% recorded in 2024. The increase witnessed in inflation was primarily due to the pass-through effect of the weaker naira, over 50% year-on-year increase, which fueled the rise in the prices of imported food components to 29.8% versus 26.3% in the previous month. That is coupled with the persistent structural factors and insecurity in major food producing areas. Given this, the food and non-alcoholic beverages 16% division remained the major contributor to price pressures, followed by housing, water, electricity, gas and other fuel 5%, and clothing and footwear 2%. Food inflation, which is the biggest driver of headline inflation, contributing over 50% to the CPI basket, reached 37.9% year-on-year, up from 35.4% in January 2023. This was largely due to the cost push factors worsened by a weaker naira, insecurity in food-producing regions, and infrastructural deficits. Similarly, core inflation, which excludes food and energy items, rose to 25.1% year-on-year from 23.5% year-on-year in January 2024. On a month-on-month basis, there was however an unexpected reduction in core inflation to 2.17% in February 2024 compared to 2.24% in January 2024. By states, Kogi 38%, Oyo 36.6%, and Bauchi 35.6% recorded the highest headline inflation rates year-on-year in February 2024. We expect cost push inflation to persist as the effect of a weaker naira and other structural factors linger. Furthermore, the festive season, Ramadan and Easter, is fast approaching, and it is a known cause of cyclical increase in food inflation. We expect the increase in inflation to be a key consideration for the MPC in the coming meeting in March. While the MPC remained firm on its stance to combat inflationary pressures by increasing its main interest rates and rates at its recent auctions, inflationary pressures continue to outpace the return on fixed income instruments. In light of this, it is important to invest in high-yielding investments that can hedge against the persistent decline in the value of naira and turn your real rate to return positive. Therefore, it is advisable to have a diversified portfolio with a sizable portion of your investments in dollars, fixed income and stocks, high-yield fixed income naira products, good-rated commercial papers, and fundamentally sound Nigerian stocks. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.